In today's video, I'm going to teach you how to trade with margin on Thinkorswim in 2026, step by step. Before you place any margin trade, the first thing to understand is that your brokerage account must already be approved for margin. If you're currently using a cash account, you'll need to apply for margin access through your broker's account settings or customer portal. Approval usually depends on eligibility requirements and current regulations, so make sure that part is completed first. Once your account is margin enabled, go ahead and log into Thinkorswim using either the desktop platform, the web platform, or the mobile app. After signing in, make sure you're on your live trading account if you plan to use real money. That's important because you don't want to confuse a paper trading environment with your actual funded account. Next, check your account balances. In Thinkorswim, head to the monitor section or the account info area and review the key values related to your account. Pay close attention to buying power, margin buying power, available funds, and the maintenance requirement. These numbers tell you how much capital you can use and how much of that capacity involves borrowed funds. After that, search for the stock or ETF you want to trade by entering its ticker symbol in the search bar. Keep in mind that not every security is eligible for margin. Certain low-priced, highly volatile, or newly listed securities may come with special restrictions or higher margin requirements, so it's always a good idea to double check. Once you've selected the security, choose buy or sell to open the order entry ticket. On this screen, review the symbol, share quantity, order type, and time in force. Then enter your trade details carefully. Choose whether you want a market order or a limit order, set the number of shares and select the duration, such as day or good till canceled, if that option is available. If your account has margin enabled and you have enough buying power, eligible trades will generally use margin automatically when needed. Before submitting anything, review the margin impact of the trade. Look at your remaining buying power, the initial margin requirement, the estimated maintenance requirement, and any possible interest charges on borrowed funds. This step is especially important because it helps you understand your risk before the position is opened. When everything looks correct, click Confirm and Send. Read the confirmation screen carefully, then click Send to place the order. After the trade is filled, continue monitoring the position. Watch your unrealized profit and loss, your remaining buying power, and your maintenance margin requirements. Because market movements can change your margin situation quickly, it's important to stay alert. Finally, manage your margin risk by maintaining extra buying power, using stop-loss orders when appropriate for your strategy, avoiding excessive leverage, and reviewing interest charges regularly. If your account falls below maintenance requirements, your broker may issue a margin call or liquidate positions based on your account agreement.